Good morning and welcome to Marco on Markets. My name's Marco, and I'm going to just share my investing journey on the share market. I'll try and do some lives of the market open, perhaps throughout the day, whenever I look like putting on a position or uh, looking to buy my next trade. You'll have to bear with me as I get used to this platform. So it's Friday morning, 10 o'clock. The market's just opened. I'll just share my screen. Okay, I think that's fine. Share. So at this stage, I won't be showing my portfolio. I'm happy to disclose what shares I've got at the moment, and I may go into the actual values of that later on, but at this stage, I won't be doing that. So the market's opened. It's mixed up and down. We've got Coles is up 4%. So I have an approved list of stocks that I can trade based on some criteria, which I'll go through at a later stage. So all these ones here in this 14 criteria, 14 stocks, I'm happy to trade, and my wife's happy for me to trade those as well. Although I will probably take some out down the track, as sometimes you have a bad experience with the stock. And then, so I'm going to have to just take this call. Just one moment. So yeah, sorry about that. Our house got flooded recently, and the insurance company just ringing there. Sort of hard to get a hold of once, like if you miss their call and then you got to leave call. So anyway, I won't bore you with that today. So where are we at? So I'll also have a look at my holding stocks. So I've got another little watch list that I can just go to, of stuff that I'm holding. So ALL, which is Aristocrat, ANZ. I actually sold ANZ, so I might just update this watch list. So ANZ. I'll see if I can take it off. Okay, I know what I have to do. So I sold ANZ yesterday and I purchased Westpac. So, and I haven't updated it yet. So I'll remove that from there. And then I'll do WBC, which is Westpac. I'm going to add that to a watch list, to holding. And then when I go to my watch list, I can see my holdings there. So Aristocrat AX1, which is a Scent Group, they do retail footwear. I just got a notification that I had a sell. Coles has gone. So I did have Coles in my portfolio, and I had a price target on there of, where's my short list, 23.65, and it's exceeded that this morning. Okay, yep, so it's gone up to 23.68. It has retreated a bit, but that has actually gone through. So I will take that off the list. Remove. I'm just going to go back up to my, let's just quickly review these other three. I've got three now. Holding. However, in these three, the AX1, I paid like $2.40 roughly. And after dividends, I think its average cost is about $2.10 or so. I've had that since November-ish of November, December, January of 2024, 25. So that's a long-term play now, unfortunately, and I'm just going to hang in there for the moment. And hopefully that comes back. But I will go into Aristocrat. I'll just pop that out to a new screen. So like I said, I do, that one's down. I'll get the stats up on another screen. That one also I've had for a fair while. So I'm just going to authenticate to get into my share site. Yeah, share site. Rightio, so so that's down 1.2% with dividends. The capital amount is down 2.76, and I've had dividends of 1.55%. And I have a sell order on at 65.22. So if we go into market depth, yeah, look, as you can see, it's still a while away. So how I work is the buy price plus 2.22%, and that gives me my sell price. And that, what that does is that nets me there's my order there, 65.22. Right. So that's still got a way to go. So that's calculated on capital, and sometimes like this one, I've had it since, let me get a date, trades and income. I've had it since November 2025. So it's, what's that, 6 months. I've had 2 dividends so far. So that's really helped with holding it. Covers part of the opportunity cost. So that one definitely won't sell today. That's down 0.05%, which is fine. I'll just refresh the screen. And I'll go back to my holdings. So let's have a look at Westpac. So Westpac, I brought that yesterday. That's on to sell at $37.52. So it's currently down about 0.7, pretty much what that is there. Okay, so we've got some money in, our coal's sold. So I'm going to go to our approved stock list. We're going to look at, I do like to buy stuff that has dropped. I know some people say you shouldn't do that, catching a falling knife, but it just gives me a bit of psychology comfort if you buy something that has dropped, because it feels like it will, the next move was most likely up. But that being said, that's not always the case. Sometimes it's better to buy stuff that is improving and is tearing away. So look, I'm not going to buy Coles again. Obviously, I just sold that. VEA, I quite like that. That's Ready Express. They do all the Coles Expresses in Australia. With the fuel crisis, their share price has increased somewhat. I did recently sell that, maybe last week or the week before. I do like Woolworths. Let's have a look at their graph. Look, it is up too much really for me to buy that today in a day. But having said that, there must be some sort of announcement or some sort of positive news for supermarkets, because that one's gone up. Coles has gone up 3.77%, and Woolworths is up 1.59%. And sometimes industries follow, so you'll see all the banks up, or all the supermarkets up, or all the retailers up, or conversely them all being down. So sometimes there might be some bad news in a bank, and then all of a sudden all the banks go down, and we're seeing that today. Look, the banks aren't down lots today, but Westpac's down, Commonwealth's down, NAB's down. Oh, they're pretty flat. NAB and ANZ's pretty flat. So look, I've just purchased Westpac. So with Westpac, that's on to sell at $37.52. If we go into the market depth, I don't know if I just showed you that before, but if we scroll down to $37.52, you'll see my orders there in the orange there. So all good. All right, back to watch list. I might just have a look at just approveds for the second. So ALL, I'm not buying that. ANZ, let's have a look at their graph. I might just out of interest have a look at what I purchased and sold that for last. So my last trade was a sell at $36.35. Right, so it's sort of in the range. I paid $35.92 last time, so it's kind of in a comfort range for me. I did pull out a bit early on that trade. I just basically wanted to take a profit, so I think I got to about 1%. I normally go for 2%, but it had just stalled. It increased and then it stalled on the day. I think that was on the 16th, so that sold yesterday. Okay. So look, I think if I can get it just a little bit less, let's have a look at a graph. What I like to do is have a look at the current price and look at what my exit price is, and then determine whether that's realistic or not. So it's currently trading at 36.14. If we add 2.2% on top, and so that 2.2% represents 2% margin, and the 0.2 is my brokerage. So brokerage with NAB trade, they currently do my orders at 0.1%. So obviously you have to buy and you have to sell. So look, that's just a rough number. I've got a more complex spreadsheet that calculates it a little bit more accurately. But basically in round figures, I'm looking, if I purchase this right now, I'd be looking to sell it at 36.94. And so I'm just going to have a look at a graph. I'll push that out to the side. So this is 1 year. There's a professor that I follow, and he always says you shouldn't buy when it's under simple moving average 89 days under that line. Look, these rules, they're just a guide. So look, it's just above the line, which is positive. That means that it would be trending upwards, my understanding is. So if it's above that line, that indicates that it is trending up. So I guess his point is, once it goes below the line, you want to avoid buying it. And the reason for that is because you might end up going further. So if you bought it just under the line, then you've ended up losing, well, not losing, but your stock was down, and then it's gone up a little bit and down, and it's just reached that line again, and then it's fallen away. So you would have, so if you've purchased it here, so that's mid-April, you end up with holding the stock all this time, and you would still be down, because if you purchased it at this point here, 37.25, roughly 37.31, you can see that it's actually never gone past that mark in the last 2 or 3 months, and so you'd be still holding it today. Whereas if you're starting from this point, well, then it's more likely to, because it's past the line. I mean, nothing's likely. I shouldn't say this is not a crystal ball, but it's just a trend. So if we just go back to, say, June, July 2025, it's passed through this simple moving average line at 89 days. And then it's actually stayed above. So at that point, it would have been trending upwards, and it's stayed above that line. It's come back, it's given a little kiss, and then again, and it's headed towards it. But then when it's broken through, you can see it's dropped. Look, it has bucked the trend there. It did come out. Perhaps there was some higher volume or something. No, not necessarily at that point. Maybe there was an announcement. Not sure, could have just been market positivity, and then it's gone below, and then it's stayed below that line, and it's only just sort of broken through that. So I do like ANZ at the moment for a short-term trade. I've traded it 1, 2, 3 times in July 2026. So let's have another look. Up here, let's do a refresh. 36.10. All right, what else is on my watch list? So Aristocrat, no. ANZ, maybe. AX1, no. Commonwealth. Let's have a look at Commonwealth. I do like Commonwealth Bank. It's the biggest bank here in Australia. I believe it does like a really high percentage of the home loans in Australia, and in Australia we love homes, so I'm going to say 90%, but I feel like that's too high. I'm just going to ask ChatGPT. Percentage. Yeah, I don't know where I got that 90%. Of course, that's crazy. I'll just pop that on the screen so everyone can see that. So we've got Commonwealth is at 25% of the lending market, Westpac 21, NAB 14, ANZ 13, Macquarie 7, and other banks 20. So there you go. So about 1 in every 4 homes in Australia, and I believe there's around 11 million dwellings. So if there's 11 million dwellings, I believe one third are homeowners, one third are renters, one third are investors is the rough guide. You'd have to say that homeowners, yeah, that doesn't mean that they own it. It means that they may own it or they may have a loan. I'm not sure what the splits are. Look, I'm not even going to guess, but let's say that 2/3, so all the rental properties. No, how does that work? So you've got 1/3 homeowners, 1/3 renters, 1/3 investors. You'd think that most of the investment properties would be with a loan, but that's not always the case. We have an investment property in our super fund that doesn't have a loan. So, yeah, I'm not sure how to work that out. Let's just see how many homes in Australia have a home loan. Look, I don't know if this is accurate, but let's have a look. So 2.8 million are owned outright, 3.4 million have a mortgage. Okay, so 3.4 million, let's do that number. So 3.24 million, and divide that by 4, that's Commonwealth Bank shares. So they have 810,000 home loans in Australia. It's a lot. Anyway, back to Commonwealth Bank. I do like that as a bank. Lots of people don't like banks, but I like them. People are always going to have home loans, credit cards, car loans, and basically how a bank works is they get your money. So if you're a shareholder, sorry, not a shareholder, a term deposit or a deposit holder, they'll give you. This is a special offer, a term deposit of 5.25. That's actually quite generous for Commonwealth Bank. Let's go to investing in super. All right, let's try and find their rates. Everyday investing. That's share investing. Let's just try and see if their search function works for deposit rates, interest rates. Okay, interest rates and fees. So this is home loan bank accounts. Okay, so if you have a transaction account, like if you've just got, $500,000 in your transaction account, you pretty much get no interest at all. And lots of people will have some money in there. the interest rate. This account, so they actually tell you it doesn't earn any interest at all. So just for a fee-free bank account, most of us will have one of those, and that's probably fair enough. They don't give you any interest, but they give you an account to use to store your money, and you can tap and pay and all that sort of stuff. So let's have a look at one that does pay interest, though. Let's have a look at high interest account. So people that are saving for a deposit, they might have a high interest account. Here we go. So they've got NetBank Saver. They've got an introductory rate, 5.2%. Let's have a look to see how long that is for. Introductory rate is for 5 months, and then that's a bonus interest of 3.1%. But the current rate, standard variable rate, is 2.1%. Okay, so let's pretend the honeymoon's over, the special's finished. You get 2.1%. I might just pull up a spreadsheet. Look, I'm just going to do it in a calculator because just one moment. So they give you 2.1%. Now, if you take out a loan, and that's probably a home loan is probably the cheapest loan that a bank offers. So because it's secured against the property, basically if you don't pay your loan and you default and it goes on and on and on, eventually the bank will say, hey, Mr. Homeowner, or Mrs. Homeowner, or Mr. and Mrs. Homeowner, you haven't paid your loan. They'll give you a certain period of time. Look, banks don't really want to sell your home to pay out a loan, but eventually they have that right when you sign a mortgage. That's exactly what that enables them to do. So let's have a look. The current rate, interest rate, is 6.09%. That's the cheapest one that they've got there. So you can see that with a bank, 6.09% minus 2.1%. So they're picking up a margin of around, let's just call it 4% for simplicity. So you've got old Nana with a couple of $100,000 in the bank. She might have it in a term deposit, so it might not be at 2.1%, but she might have, say 50 grand. She might have 50 grand at call at 2.1%, and then with that 50 grand, they are lending that out at 6.09%. So they make a margin of 4%. And so on 50,000, so Nana gets $1,000 a year, but the homeowner pays on that 50,000 component 3,000. So you can see that the bank grosses roughly around $2,000 on that $50,000 that old lady's got in her bank account. And so that goes towards obviously paying CBA staff, paying rents, their technology, the CEO, marketing, websites, everything. And then at the end, they also want to give a return to investors. So you can invest in Commonwealth Bank, just like I'm considering buying some shares right now. And if you have the shares on a particular day, I think they do go ex-dividend twice a year. So if we have a look in CBA, we go to dividends, it'll give you what's called a record date. and an ex-dividend date, and it's usually 1 day apart. So if you're holding the shares on this particular day, you will then be entitled to a dividend. So if you have them on the 18th of February, you would get $2.35 per share. You get $2.35 per share. Is that good? Well, let's have a little look. So that's the bank margin. They call that net interest margin. And look, to be honest, I've picked probably not an extreme version, but if you have a look at things like unsecured loans, things like credit cards, let's see where their credit cards are. Look, you can get cheaper credit cards, but some of the most expensive credit cards are like 20%. So they do have interest-free credit cards. Let's have a look down here. Okay, so this is a low interest credit card, and it ranges from 10.99% to 15.99%. Okay, and this one is a low fee credit card, so it has either a no monthly fee or a $3 monthly fee, whereas this one has a $6 monthly fee. So you have to weigh up, do I go for a cheaper monthly fee with a higher interest rate with an interest-free period, or do I go for a lower interest rate with a higher monthly fee with the same interest period? You have to really just do your calculations. Hopefully everyone's just paying their credit card off each month and not paying any interest. But you can see my point was someone might be paying 20% per annum, and to fund that, it might only be costing the bank 2%. That being said, credit cards are unsecured, so when a cardholder defaults, sometimes it's very unlikely that the bank will receive that money. It's a bit of a headache for the bank. So that's called net interest margin, and when you hear it advertised, it probably comes closer to around 2%, because they're adding up all the money that they've lent out and the interest received, and then all the deposits that they've paid interest on. And so some people are getting none. So for example, the people with, say, $1,000 in their savings account that's getting no interest, so they're getting no interest, and some of that money is funding, say, a credit card. Anyway, so that's that. And then the bank will pay out a dividend. In this case, as we saw, what was it? Oh, it signed me out. I'm just going to sign back in over here on a different screen, just for privacy. Rightio, so back to my watch list. So let's go back into their Commonwealth. So now it's down 1.29%. That's looking, more nicer for me. What was I saying? Dividends. And you can usually work out, sometimes I have a calendar. Like if you go to the Commonwealth Bank website, have a look at their investor page. But what I do is, if you just have a look at a longer period, if you're interested in dividends, so let's change that to 23. And they just follow, they follow a pattern, and it's not exact. So if it's a concern, you getting a dividend, then you probably should go and have a look at a calendar. But looking at the past 3 years, it goes ex-dividend in August, and also in February, and the dates are very similar. So 16th of August, 21st of August, 20th of August. So somewhere around that mid to late August, if you're holding the CBA shares, so that's in a month's time, you'll get what's called their final dividend. They will declare that. I'm not sure 100% if it's done just out of a meeting or if it's done like it can't be an AGM. I can't imagine they'd have the AGM, which is annual general meeting, by August. But anyway, based on the past $2.40, $2.50, $2.60, I would say it'll be around the $2.40 to $2.60 range based on the past. But they it's up to the management whether they return the same as normal or whether they conserve the cash or give more cash. So if you're holding it in August, you're likely to get a dividend around the ex-dividend day. So, but if you're interested in getting dividends, then and you're trading, well, you need to hold it past that date. I don't really worry about it. Sometimes you get one if a trade goes longer, and that's okay. That's like a bit of a bonus, or you can use that to exit out towards your exit price. So at the moment, CBA is at 170.97. I've got to check my 2.2%. So for me to get out and make my margin, it needs to sell at 174.73. I'm just going to have a look at a chart. I'm going to add on my little SMA. Look, I don't do this for every stock because once a stock goes on my approved list, generally I'm pretty happy with it. But it's always good to have a look to see how it is trending. And again, this bank is also above the SMA line at 89 days. So I'll have to track down that resource. It was an old guy, I think he was from the States, and he just seemed to have a lot of wisdom. But anyway, it's just another tool. There's plenty of indicators that you can use. I don't know them all. I don't profess to know them all. But find something that, helps you make an informed decision on whether this is likely to go up or down. Commonwealth Bank has been up to about $180, and it's in the last few months it's been as low as 153. I think that was around the time of the budget where the Albanese government have removed CGT tax discount on existing properties. They are maintaining that discount on investment properties, and so from an investor point of view, that does make an investment property less attractive for an existing one anyway. And also they did remove negative gearing. They did grandfather for the people that have investment properties as at the night of the budget. But for new investors, you can only get a capital gains tax discount of 50% on new investment properties. And you can also negative gear that. But do your own research into property. Traditionally, it's been a good investment. I have mixed views on that now, especially here in Victoria with all the taxes that we have to pay and the general attitude towards landlords. But this is not a political rant. So let's get back on track. Do we buy or don't we buy? So get my calculator back. It's got to get to 174 to get a 2% margin. So is it likely to go from here up to here? Now, based on the last couple of months, no, because the peak has been 173. So we're talking about another dollar on top of that. It could do. I don't have a crystal ball. I'd probably like to see it come down a little bit further before I purchase that one. But I do like Commonwealth Bank, so I'm not going to lie. But it is also trending up according to this SMA line, and it's above the line, which is a positive sign according to the professor. Let's have a look at the watch list. Okay. So what else? Coles I just sold. So this one, yeah, so it's up 4.48%. So that's one of the negatives of my strategy is that when it runs, you can miss more of the upside. So, but I like to just get my margin and get out and then move on to the next thing. And over time, I feel that's, for me, that's a good strategy, but everyone has to find their own. And just a disclaimer, this YouTube channel is for entertainment and educational purposes only. You should do your own research, get your own financial advice, and never invest based on what some guy's doing on YouTube. So I sold that at sold at 23.65 this morning. Look, actually, I must have been down a bit. So I purchased. Let's do the numbers on the screen. So I've got. I purchased at. These are gross numbers: $23.14. And I sold for $23.65, so it's 51 cents on 23.14. So it's 2.2%. You take out the fees, and I should net 2% on my investment. Your investment size is important. If you get 2% on $1,000, that's like $20. It's not really worth doing. So if we did it on 1,000, you get $22. Take away your fees, you probably don't end up with anything at all. If you did it on $10,000, that would be $200. If you did it on $50,000, then that would be $1,000. So you can see that the more you invest, well, the more substantial. Obviously, it goes both ways though. So if you lose, the more you've got invested, the more you lose. So you have to be, whatever you're comfortable with. My advice is, well, it's not advice, but for it to be worth it, you're probably looking around the $20,000 to $30,000 mark per trade as a minimum. So if you make, let's say at 30,000, you make 2%, it's $600. So that's yeah, but you have to be comfortable with that. Okay, so get rid of the calculator. So that one, yeah, obviously I wouldn't buy that again. I only just sold it, so I paid $23.14. So I was actually down and it's made its way back. Let's have a look at the graph there. So I purchased it on the 13th of July. So if we just change the date range to 5 days, because today's the 17th, so I purchased it on 13th, which was Monday at $23.14. So I purchased it at this point here, and as you can see there, that's where I purchased it. It was probably in there in the morning, and then it's dropped away. Now this looks huge, like that looks really bad. I think it was down 2% to 2%. Well, if it's gone up 4% today and I was down 2%, that makes sense. So I was down 2% from Monday to close of Thursday night, sorry, and then it's opened. There's been an announcement. Coles have ceased discussions with Green Cross. Green Cross is a group that do like vets, and I think they currently are in the back of like Pet Barn and stuff like that, Green Cross vets. So I'm not sure what they were doing, whether they were going to sell medicines or I don't know. Anyway, we're having discussions. The market got all antsy a few weeks ago, maybe 2 weeks ago. All it was a discussion. They come out and said, look, we're just talking. The market got excited, and then they decided to not go ahead. So now they've just confirmed that they're not going ahead with that, so that's fine. Okay. So yeah, as you can see, it went from 23.14. It reduced all the way down, and then this morning it surpassed my sell order. I always like to just put the sell order on straight away. That way, if you're busy with work or something, you can get that gain without watching it. So back to the watch list. JB Hi-Fi, I do like JB Hi-Fi. That is at a not a premium, but it's at a high right now. So it's had a couple of good days. Now let's add the indicator on there. Trend line, SMA, 89. Okay, 89 days. It's below the line, so it is actually trending down. So that one, I wouldn't touch that at the moment. So, but look, at some stage it will probably, reach the line and surpass it. But for now, I really have to just sit this out because it's just it's under, so it's actually trending down. Doesn't mean that that's what it's going to do. It doesn't know what Warren Buffett's going to do if Warren decides to buy, $1 billion worth of JB Hi-Fi shares. Like, it doesn't know, and that would push the price up, and then it will go over the line. But just as a whole, it is trending down. So I'll just have to sit that one out. So if I go back to my watch list. So, Commonwealth's dropping a bit more. Coles has gone up. So, look, like I said before about Woolworths, like that has gone up today. Some people won't know why Coles have gone up. They would have just gone, oh, Coles has gone up, so I'll buy Woolworths, even though Woolworths were not in discussion with Green Cross. So that does happen. Macquarie Bank, I love Macquarie Bank. Um, that is, it's down a little bit today, but it's just a bit on the high side for my likings. A lot of investors say once it's under 200, but it's a good time to buy. So, but anyway, it's really teared away in the last sort of 2 or 3 months. NAB, I just want to see what I've had that recently. I just want to see what I last paid for that. So I last did that sold at 37.85. So yeah, that's a bit high for me. Centre Group, they do all the Westfield shopping centres. Sigma's been a new one. I like Sigma. Chemist Warehouse is one of their businesses. Always busy. People love it. I did just do my first trade, I think, last week on that. So that's on my list. I've been watching it for a while, and admittedly, I'm glad I didn't touch it previously because it was always around the $3 mark, and it dropped down to like 270. So VA, I can't do that. That's a bit on the high side for me. Yeah, 287 I sold that at. So Wes Farmers is really tearing away. They do Kmart, Bunnings, Officeworks, great business, and Woolworths. Well, I might leave it there. I'll touch base later. I'm probably liking Commonwealth. I wouldn't mind if it come down a bit more. So yeah, it's still dropping. So look, what did I last do Commonwealth at? 169.50 is what I sold it at last. So yeah, I might just sit out and touch base this afternoon. Have a good day.